So we've been talking about additional activities that an accountant would have to do besides completing the activities of the accounting cycle. Chapter 11, we talked about writing checks, balancing your checkbook, reconciling your bank accounts, and so on. Chapters 12 and 13 deal with payroll. So what is the importance of payroll? Well, first, payroll is a list of all employees and the payments due to each employee for a specific pay period. So when you are completing payroll, you're looking at all the employees you have and calculating or figuring out how much you owe them in the form of a payment for the time that they have worked for you over a specific pay period. Pay periods are the amount of time over which an employee is paid. Normally, it's every 2 weeks, bi-weekly paychecks. Whenever most of our activities in our book are going to deal with bi-weekly paychecks. But there are some businesses out there where you get paid weekly, or maybe you get paid once a month, or every quarter, so on. So you, as a payroll accountant, would need to know how often, or what is the time span that I am calculating payroll for. And then you need to work out your payroll system. And so your payroll system, the first step of your system would be to collect and process all of the information needed to prepare and issue your payroll checks. So this could be collecting time cards or printing off a sheet off from your computer system that allows you to know when they clocked in, when they clocked out, when employees were working, how much money they're making an hour, if they're paid salary, so on. So you collect all of that into one location. Once you have all of that, then you're going to generate or create your different payroll records. And these records are used by various people in the business and then also in the government. So you're going to create a payroll register, which shows for each pay period how much money is paid out and what the deductions were, what the taxes are. And then this allows you to pay the government their share of taxes that you as a business have to pay them, or the employees have to pay them. And then you can also create different records that allow managers to see how much is being spent on payroll and if they can adjust it so that not quite so much is being spent on labor, so that then they would make more of a profit themselves. Sometimes an accountant will hire a payroll clerk. A payroll clerk basically does everything the payroll accountant does, but then the payroll accountant would look over what the payroll clerk does and do the final sign off of it. So your payroll clerk is going to make sure that all of the employees are paid on time, they receive either their paycheck or the direct deposit on time, that each employee is paid the correct amount, that all payroll records are complete. They're going to submit the payroll reports to the managers, to the owners, to the government, and then they're also going to make sure that payroll taxes are paid, that a check is paid to the government for the necessary taxes. All right, so the first thing that you have to do is calculate your gross earnings. So gross earnings and gross pay are the same thing. So you're going to see those two terms interchangeably throughout our lesson, throughout the text. And gross pay or gross earnings is the total amount of money an employee earns in a pay period. This amount is not necessarily the amount that's taken home, because we're going to talk about taxes and other deductions that are going to come out of it, but it's what they've earned. And this is based on salary, hourly wage, a commission, sometimes it's salary plus commission, and then any overtime that the employee worked. So salary is a fixed amount of money paid to an employee for each paid period. So no matter how many hours an employee works, they get the same amount. So usually salary is stated as an annually or a yearly figure. So you could say that they make $45,000 a year. So then what the payroll accountant does is, if they're getting paid bi-weekly, that would be 26 paychecks in a year. So the accountant would take that $45,000 and divide it up by 26 to figure out the gross pay for each particular pay period. On the other side of that is an hourly wage. Here, this is a wage that an employee makes per hour. So $6.50 an hour, $7.50 an hour. So here an employee is going to fill out a time card. There's an example of that up on the screen. States their name, and then they either hand write in when they come in each morning, when they leave for a break or for lunch, when they come back, and then when they leave for the day. Or it may have it where a clock automatically punches this time in for them. Then at the end of the day, they can either calculate how many hours they've worked, or the payroll account would calculate that at the end of the week. Then down at the bottom of this particular time card, there's a spot where you can calculate how many hours they worked, what their rate was, and then you calculate that out. And then you can also note if there's any overtime for this particular employee, and then you can write down what their total earnings were for the week. Now with the advance of technology, there's several other ways that hourly employees clock into work or record their work hours. It could be done using electronic badge reader, which is where your employees are given a badge, kind of like a credit card almost, where it's either scanned or they swipe it into a computer when they come into work and when they leave, and that will calculate and keep track of their hours. It may be where they punch in with using an ID number or username of some sort as well into a computer. Many companies divide hours into 15-minute quarters. If I go back here a second, you'll see on this time card, Monday here, she worked 7.25 hours. And well, what does that quarter mean? Sometimes you're going to work, you don't work a full hour, but they want to pay you for some of that hour that you've worked. So 15 minutes after the hour mean you've worked 1/4 hour. So if you clock out at 2:10, they may round that up to 2:15 and they'll pay you for a 1/4 hour. Okay? And then if you otherwise clock out at 2:25, okay, they'll round that up so that's 30 minutes. So then that's a half hour. So you would have worked, so you'd get paid half what your hourly wage was. You may get paid on commission. Commission is an amount paid to an employee based on the percentage of the employee's sales. So here's an example of that where Joyce is paid 5% of commission of all of the sales she made. So last week her sales were $8,524. So she gets 5% of that. So her gross earnings then would be $412.70. You see a lot of commission where they are solely selling products, so like car dealers, sometimes like cell phone people, where they're selling a product, door-to-door salesman, types of those things where they are encouraging you to sell things. So they encourage that by that's the only way you get paid. You may have salary plus commission. This is becoming more common, or you may hear it as salary plus a bonus. And this is where you receive a set salary every week, but you also receive commission on top of that. So not only are they guaranteeing you a certain amount of money, but you also get a percentage of your sales, so they're encouraging you to sell items. So here Juan gets $200 per week plus a commission of 3% sales. Okay, so you would take your $200 and figure out what his commission was to get his total gross earnings, $340.30. Okay. We have overtime pay. So how do you calculate overtime pay? Most cases, overtime is considered if you work over 40 hours a week. And then in most cases, you also get time and a half or 1.5 times your hourly rate. So down here, we've got our regular hours, so they get $6.60 or an hour. So we times that by 40 for their regular pay. And then to find their overtime, we took $6.60 times 1.5 to get $9.90. Okay. They had 3 overtime hours, so you can calculate that out, and then you would add those two together to figure out their gross pay. Okay. So how do you figure out overtime pay for a salary employee? This takes a little bit more work. You have to figure out what the hourly rate would be for a salaried employee. So here's an example for Jim. So Jim's salary is $600 a week. So we figure he's working 40 hours a week. Okay? So we're going to take what he makes, this $600 divided by 40, to assume then that it's $15 an hour. Well, now we got to figure out what he works, what his overtime pay is. So you'll take that 15 and multiply it by 1.5 to get $22.50 for his overtime. So if he worked 44, okay, and they are saying that the salary, this particular business, they do pay overtime for salaried employees, because a lot of times they don't. But here they do, so he's got 4 hours of overtime. So we're going to take his 4 hours of overtime and multiply that by his $22.50 to get an extra $90. So then you would add that to his salary of $600 to get his total of $690. So we're going to go ahead and practice calculating some earnings here. So first we've got calculating by using hourly basis. So here we have Pam. She works 38 hours and she gets paid $5.60 an hour. Or excuse me, $5.96 an hour. So we're going to take our 38 hours worked, multiply that by how much she gets paid an hour to get a gross earnings of $216.48. So I'm going to give you a moment to go ahead and calculate the other answers on this demo problem, and then we'll check your answers. If you need some more time, go ahead and pause the video. Otherwise, okay, for Steve, you should have gotten $133.40, and for Mary, it was $195.20. So now let's go ahead and calculate their gross earnings based on commission. And so here it says M&H department store pays its employees an hourly wage plus commission of 7% of their sales. So first we're going to find what their hourly wage is. So for Adam here, we're going to take his 37 hours worked and multiply it by what he makes per hour to get $214.60. So now we have to figure out his sales, and it says he gets 7% commission of his sales. So we've got his total sales, and we're going to multiply that by 0.07, which is 7%, to get $166.95 in commission. So now we'll add his hourly wage total plus his commission to get $381.55. So go ahead and pause the video and you can figure out the other answers on this demo problem, and then we'll check them out. Alright, so for Jan, you should have gotten $443.85, and for Pat was $293.71. Alright, then the last one we're going to do together, I believe, is calculating overtime. Okay, so here the Veneer Company pays its employees an hourly wage and overtime after 40 hours per pay week. Find the gross earnings of the following employees. Excuse me. So here we're calculating overtime for Peter. So he's worked 43 hours. So we know that 40 hours is going to be times his hourly wage, and then he's got 3 hours of overtime. So to calculate his regular earnings, we're going to take his 40 hours times his hourly wage of $5.30 to get $212. Okay. Then we have to figure out his overtime earnings. Okay. Well, to figure out what he's making overtime, we have to take $5.30 and multiply by 1.5, and you're going to get $7.95 per hour for overtime. Okay, he's worked 3 hours because he's worked 43 hours, so he's got 3 hours of overtime. So we'll multiply 3 times $7.95 to get $23.85. So we're going to take his regular earnings and multiply it by his overtime earnings to get his total gross earnings of $235.85. So go ahead again, pause the video if you need to, and figure out, calculate the rest of the answers for this demo problem. Alright, so for Matt, you should have had total gross earnings of $269.50. And for Sue, we've got $215.80. Alright, so that wraps up calculating gross earnings, which is section 1 of chapter 12.